weekend all. Ira Epstein with your weekend edition of your metals market wrap-up for this Friday, the 3rd of January, 2020. So in looking at the markets, we all woke up to the fact today that a General Soleimani was taken out by the U.S. along with 6 other people in a apparent rocket strike of some type. The Iranians say helicopter, we're saying it was drone, but any way you go about it, the president said that he did take this person out and the markets got scared. And they should be scared. We don't know what the Iranians are going to do back as a retaliation. The reaction in the market, and you would think that, oil prices up because Iran is so close to the Strait of Hormuz. We don't know what's going to go on there. We look at the grains, they were down. I don't understand why grains were down off that news. It doesn't make sense. Bonds and notes were both bid as safe havens higher. Gold certainly got its bid, and it's been so long. You know, we saw Korean situations where it never reacted. Bitcoin even got a nice little bid on it today. Put that together. But let's go to the charts. And remember, on the weekend edition, I do one monthly chart, and then everything else is on a weekly basis because we're looking at the bigger picture. The market had right through here, if you look at it, a pattern where the market had an outside week down. We came back last, and this is monthly, I said week, last month, took out the high of that, and we're continuing on early on this month of January. So we finished up December, as you can see, $57 higher, and we're adding to that in the first few days of this month so far, another $29. Momentum up, trend got higher lows, higher highs, everything's bullish on this chart. When I come to a weekly area chart of just closing prices, this is the first close where you're able to get over this area right here in this 1526 zone. So the market's thrusting to the upside. The bias is up, support's back if you wanted to come down to it towards that 18-week moving average, and that would be the 1490 area. When you take a look at where prices are and you come back here, this is what the market is into. This is the resistance on a weekly chart. We'll come right to this price so you can see it. Right there at 1559.80. That's the high. And when I step back and bring everything back in, should make some sense to you. As you can see, that's where the market got up to, and that is the resistance zone. It just didn't show up out of nowhere. It pointed to that number. Now, when I put the swing line on, and what a swing line is, it's a line that looks at the previous, in this case, week. If you have a higher high, it's drawing to that. If you got a lower low, it'll draw to that. Then it looks at inside days and outside days, up and down, and I teach all this in my charting course. But the pattern is one of higher lows, higher highs. That is bullish. The market is trading over the 18-week moving average of closes. That gives the market a bias to the upside. And I define bias as to where prices close in relation to the 18-week average, over its upside bias, under its downside, and often a market will come into this area, if you will, and fight against it one way or the other, trying to figure out what to do. In this case, the market took off to the upside. Where's the resistance? One of the levels is certainly right here. Now you finished today at 1550.240, which is over the upper Bollinger Band. The importance of Bollinger Bands are that the market will trade within them 95% of the time, and how I teach charting is, generally speaking, the first time you hit a band, it's where pros are taking some money off the table. Now, how do I know they're long? Well, if the bias is up and the trend is up, that's the assumption I'm making. If the trend is down, the market falls, I'm assuming that against that lower band might be an area that they're again covering their shorts. In terms of momentum, on the weekly chart, we don't look to see if a market's overbought or oversold. Just which way is the momentum pointing? It's up. The trend is up on the swing line. You've hit an upside target. You're into a resistance area from the old high, and the odds of staying over a Bollinger Band 5% of the time. So keep that in the back of your mind. As we come to this next chart, and it should fill in right now, GLD, there we go. The market's got the same pattern, higher lows, a higher high. Let's back off if I could, and I should be able to right here. And we take a look. Here's how you looked at the end of last week. Now, if you continue up, you're already in an uptrend, the Bollinger Band could offer some of the resistance. Market went to it. It closed over it by about $1.40, but it is a resistance zone. We'll see if the market does anything. Let me give you a secret. If Iran retaliates over the weekend, I would expect to see the metals jump. We don't know what kind of retaliation or if there'll be more coming. If they hold and do nothing, the market, while it's nervous, probably says, okay, let me digest what's going on. I'm just giving some ideas here as to how it's looking. Momentum up, bias up into a resistance area. When we get to the gold miners, right up to the upper Bollinger Band, ran into your resistance, closed 29.17. That number's 29, looks like to me like it's 29.17, literally right on it. Higher lows, higher highs. You've hit upside targets. That's the important thing. I don't know, nor do you, what's going to happen over the weekend. The market is built in already, the uptrend. Now the question is, does it get something additional or not? The gold-silver ratio had been on the weekly chart correcting, and it's pulled back to that resistance of the 18-week moving average of closes. Silver for the week is up 30 cents. You can see the resistance. I'd be looking at that upper Bollinger Band. Unlike the gold market, what it's basically done is traveled from the lower Bollinger Bands up towards that upper band and still chopping in between, not setting up a trend per se. In the copper market, what copper did is it got up, and this was right through here. This is the week of December 13th. Your first challenge of the upper Bollinger Band and the 100-day average. Now, you got to the bands right here on this week. You again challenged as we got in through here. That keeps the 100-day as the resistance. The odds of staying over a Bollinger Band, but 5% of the time. Now you had another settlement over it. I count each successive settlement over, taking away one of those 5 percentage points. And don't go into your math and say, what if you get beyond 5? Just go do your counting. That can happen. Just a degree of strength. You're not looking to go short here. The question is, should one be taking money off the table? 3 days in a row. That gives you a 98% chance coming into the week that the market could be under that Bollinger Band. The market slips back today. That's all that it is. It is not a sign of a top. It is certainly a sign that the market's potentially running out of resistance. Now, I'll be watching slow stochastics to see if they turn down. In the platinum market, I'm going to repeat what I said. Often, the first challenge to the upside or downside in a Bollinger Band is a resistance point. Pros take money off. Taking money off does not mean they're getting necessarily out of all their positions. They'll look at a number of things. And I'm certainly not saying they're going short. Trend up, bias up, hit an upside target, momentum still up. Palladium market, you tell me where the battleground is. Look at that Bollinger Band. You went up, you've had corrections, but nothing so serious to stop the market. Now, you've had 2 weeks already where you had an outside week down and you didn't take out the high of that week. Now, if you take it out, it's not one of those trap plays that I so often talk about on the daily charts. This is just the resistance area in the market. And if you look at the dollar index, momentum down, all we're doing is pulling back into the Bollinger Band. The trend, lower highs, lower lows. If this ground gives way in the Bollinger Band area, the 100-day average is the next support zone. You neutralize the downtrend. If you take out 97, and I'll show you the exact number here, 97.40 and a half, because that would give you a pattern if you don't first break down of higher lows and a higher high. That doesn't mean you'd be over the 18-week average. I explain what I'm talking about here in great detail in my daily research. And how I go about that is pretty simple. Number one, you can get it on and when I publish my research, you can get it on your smartphones, you can get it on a tablet, in your computer, or as a regular email. In addition, I do videos in the morning, and if you haven't seen my morning videos, you should. Now, I've already begun creating my Spider and ETF video. I'm about a third of the way done. I will have it done this coming week. I'm not certain when I'll be posting it, but it's just another product I'm going to offer. If you'd like to see what we do, though, in the futures, well, we can show you that because I write my commentary and so on. And a lot of our people want the daily commentary from me. It's short. It's meant to be short. It's about what's coming up, what the market's expecting out of the next day reports, how the report looks in a way that doesn't take up all your time. I'll let you go read the other things that are pages long because most people can't understand it anyways. I'll give you the facts as I see them. To get a free trial to my research, give us a call. You can go to our website, www.iraepstein.com. You'll see on the bottom right, free offers. Click on it, sign up for it there. You can click here if you're watching me on YouTube. I'm Ira Epstein. Have a great weekend.